Alright, it's time to talk about how I was wrong. I thought Bitcoin had reached its bottom back in June when we hit about $17,500, and we have made a lower low, unfortunately. So yes, I was wrong, but like I said, it was going to take something really unforeseen and really huge to send us down for another lower low, and I don't think anybody saw that FTX was going to be collapsing. And this has a lot of people speculating that cryptocurrency could go to zero. This article by Yahoo Finance says that crypto could go to zero if everybody stopped using it. And I think that's pretty obvious, but we have to remember that anything is definitely possible and Bitcoin could absolutely go to zero. I definitely don't think it's going to happen, and I am still dollar cost averaging because I believe this is going to still represent the best opportunity to make life-changing wealth during the next bull market. However, if we continue to see these exchanges having a contagion effect and bringing down other exchanges, and then there's no other way to get a fiat on-ramp, then it's going to be pretty hard for your mainstream investor to get into cryptocurrency investing. Again, I really don't think that that's going to happen, but it is still not certain that we've seen the extent of the contagion from the FTX scandal, and it looks like we could be seeing more exchanges going down, such as Genesis. This article by Cointelegraph says that American regulators are investigating Genesis and other crypto firms. It says the investigation is another chapter in the Genesis saga since its company revealed it had around $175 million worth of funds stuck in the FTX trading account. On November 16th, Genesis announced that it had temporarily suspended withdrawals, citing unprecedented market turmoil following the FTX collapse on November 11th. It is still really hard to buy cryptocurrency with dollars unless you use a centralized exchange, but I don't trust these centralized exchanges at all because I don't know what kind of assets they actually have compared to their liabilities, and there's not really very much transparency. So hopefully we will be seeing some regulation coming out. It's going to be inevitable, but hopefully it's not going to be too extreme, and it will provide a little bit of clarity so that people can feel more comfortable investing their hard-earned money into cryptocurrency, and we can see institutional investors pouring more money in, knowing that they're not putting their clients' money at risk. Even if we do see some more regulatory clarity and we start to be able to see how many assets and liabilities these cryptocurrency exchanges do have, I think I'm still going to be using a cryptocurrency cold wallet because I think that's the best and the most secure place that you can keep your cryptocurrency, and that's really what cryptocurrency was made for. You're supposed to have self-custody because if you want someone else to hold your money, then you might as well put it in a bank. The whole idea is to not trust anybody else with your funds and to be able to take control over your funds, not letting a bank lend out your money to make a profit at your expense. The decentralized nature of cryptocurrency is what has the potential to set us all free, and if we give all of that power to more centralized entities, then we're really just recreating a more complex version of the traditional finance system. Right now, while everybody's panicking and thinking that there's going to be more cryptocurrency exchanges collapsing, could represent the best opportunity to accumulate cryptocurrency, because if you're going to continue to wait for the next leg down, then you're always going to be waiting on another one, and you're going to miss the next opportunity to buy at the bear market and make life-changing wealth in the next bull market. Looking at the net unrealized profit and loss, or NUPL, you can see that we are pretty much down here deep in capitulation mode, just like we have been in the last two bear markets. And as you can see, we have been having decreasing capitulation levels over the past few bear markets, meaning that we're probably not going to be going any lower than we have in the last one, and we could be actually at the bottom already. Here we have the reserve risk, and the reserve risk is a Bitcoin chart that allows us to visualize the confidence amongst the long-term Bitcoin holders relative to the price of Bitcoin at a given moment in time. Usually whenever this red line gets down into the green box, this is a really good place to be accumulating, and that usually means that we're reaching the bottom of the bear market and full capitulation. It has never been any lower than it is right now, with it actually being below this green box, and this is probably representing a once-in-a-lifetime opportunity to accumulate as much cryptocurrency and especially Bitcoin as you can before it actually does reach mainstream adoption. I think we got really close in the last bull market, but people were really quick to give up on it whenever it had a little bit of a dip. A lot of people have been comparing this recent crash to the dot-com bubble, and if you have paid any attention to what happened after the dot-com bubble, that was pretty much your last opportunity to really get in on stuff like Apple and Amazon before people started saying stuff like, I wish I had bought some Apple or Amazon back in 2000. After that, everybody thinks that they've missed their opportunity, and it gets hard to pick a time to actually throw your money in because you think that there's actually going to probably be a retracement pretty soon. However, it is reaching mainstream adoption, and that just means that it's probably going to be going straight up and to the right for the next decade or so. This right here is Amazon in the crash of 2000. and as you can see, it got down about 95%. By the time it got back up to its all-time high, it would be really hard to find a position to get back in at, because as you can see, it really didn't have any significant declines after that for a long time. Going on for years and years, it just kept going straight up and to the right. If this crash has really been the equivalent of the 2000 bubble for cryptocurrency, then this means that we're probably going to be seeing the most significant bull run of all time after this, and we're probably never going to be coming back down to these levels ever again. Here we have the Puel multiple, and as you can see, whenever it usually gets down in this green area, it doesn't spend hardly any time there at all, and then it goes up for the next bull market. We've actually been down here for more time than we've been in any other time in the past, I believe, and it looks like we're actually reaching full capitulation. If Genesis actually does go down, and maybe Crypto.com has some exposure to that and they're just holding on right now, then they could actually have a decline and maybe even crash as well, and this could definitely bring down cryptocurrency significantly lower. But that's not going to change my strategy, because no matter what happens, I'm just going to continue to dollar cost average, because as I keep saying, I know cryptocurrency is eventually going to recover, and I think the time is probably coming up pretty soon. Here we have the weekly chart for Bitcoin, and as you can see, since the top of the market, we have pretty much been in this downward wedge. There's been a lot of speculation of if the wedge is actually right here or if it's more out this way, and it's been hard to tell because two touch points don't really make a trend. So as this continues to move sideways, it has been kind of pushing this wedge out to the side a little bit, and it looks like we are still kind of stuck within it. It is possible that we'll come back down to retest the bottom of it, and unfortunately, if you look right here, as you can see, that does kind of coincide with this upward trending support line that we have bounced off of a few times in the past, which could go back all the way to 2017. That would bring us down to about $10,000, and we would probably fill out this downward wedge again. And whenever we do eventually break out of this, the price target for a downward wedge is the top of the wedge, so eventually we will be going back to all-time highs. But the question is, when are we actually going to break out of this downward wedge? Right now, it does look like we have a possible bullish divergence indicated by this white line, these two white lines right here, with the RSI heading to the upside and the price actually making another lower low. However, this is a weak bullish divergence, because as you can see, the RSI could definitely come back down into oversold territory, and then it would nullify this whole bullish divergence, and that would make us have a lower low here for the price as well. However, with the RSI here getting down into the oversold territory deeper than it ever has in the past, I still believe that this is just another indication that this is the best opportunity to be accumulating, even if we do go down to $10,000 from here. I know that seems like a significant drop, because it would represent another 30% drop or so. But like I said, if you continue to wait for the next drop, then even if we do drop down to $10,000, you're going to be waiting for a drop to about $6,000, and then you're going to miss the opportunity to buy in at the bottom, and we're all going to go back to the moon without you. This week we do have some really big catalysts that will hopefully be putting this FTX news in the past and making a decision on which direction the market is actually going to be headed next. We have consumer confidence coming out on Tuesday. Then we have non-payroll employment change coming out Wednesday, along with GDP for the third quarter, JOLTS or job openings, pending home sales, crude oil inventories, and the Fed Chair Powell is going to be speaking all on Wednesday. Wednesday is going to be a very big day, and I think that's probably when we're going to be seeing some kind of decision and possibly a really big move, which will hopefully be to the upside. Then on Thursday, we have core PCE price index, which is something really important that the Fed looks at to decide what they're going to be doing with their interest rate hikes. Also on Thursday, we have initial jobless claims, ISM manufacturing, and on Friday, we have non-farm payrolls and unemployment rates. So this is going to be a really big week with a lot of data, and unless we do see a bigger catalyst, something more fearful than even the FTX collapse, I do believe we've possibly reached the bottom in full capitulation, because I don't really see people getting much more fearful than they are right now. Everybody that has cryptocurrency has basically moved it off of exchanges unless it was locked on an exchange in the first place, and everybody that's sold has probably already sold if they're going to. The Fed minutes came out last week, and they anticipate slower interest rate hikes coming soon, with most Fed members indicating that they're probably only going to be doing a 50 basis point hike next month. With the Fed continuing to raise interest rates but not being more and more aggressive month over month, I believe this is going to be giving a little bit of relief to markets, but this isn't going to necessarily be sending us up for a parabolic run. I think things are still going to be pretty sideways for the next few months, possibly even the first quarter of next year, while we continue to look and see how much damage the Fed's interest rate hikes have actually done to the economy. We didn't really see earnings come in negatively last quarter, so I do believe that the stock market possibly does have another leg down. But as people start to look for other places to invest where earnings aren't really a big factor, I think they're going to start looking at cryptocurrency, and we could be seeing Bitcoin recover before the stock market actually does come back up. The Fed is watching this holiday season to see if the economy is slowing down and if people actually have enough savings to buy all of the things that they want to, keeping the economy afloat for another quarter. But I think that the interest rate hikes that they've put into effect so far are starting to actually do some damage to the economy, and people are probably actually going to have to swipe their credit cards a whole lot this season to get their kids all of the presents that they want. This is going to be reflected in the data, and we're going to be seeing probably the sales coming in lower than expected for all kinds of companies across the board, and this is going to lead to lower earnings and possibly even another dip in the stock market. But like I said, cryptocurrency doesn't have earnings, so we're not going to have to deal with that pain. We just have to see how much the economy is going to suffer and if people actually have money to invest in cryptocurrency moving forward. Whenever cryptocurrency does finally come back, though, I want to make it clear that, like this article by Cointelegraph says, it's time for crypto fans to stop supporting cults of personality. Maybe it's not necessarily time for us to stop supporting it, but definitely it's time for us to stop relying on these people. Cryptocurrency was not Sam Bankman-fried. Even though Sam Bankman-fried was at the front of the line and it seemed like he was standing up for us in front of all of these regulators, pulling for the cryptocurrency industry, he was not the person that we needed to be leading the cryptocurrency space, because obviously he was misusing user funds and he ran one of the biggest scams in all of cryptocurrency and possibly even all of financial history. A lot of people were relying on Elon Musk to take Dogecoin to the moon in the last bull market, but then he went on SNL and he slipped up and said that Dogecoin is a hustle, and that sent everything plummeting to earth. We cannot always rely on these guys to say the right things or do the right things behind the scenes. Everybody wants to be popular and everybody wants to make money, and these guys are no different. They're using their popularity to make money as well. If you want to support Elon Musk and his endeavors, then that's totally fine. But we don't need to rely on him to bring cryptocurrency to the moon, because Dogecoin and the rest of cryptocurrency is going to make it with or without him anyway. This guy is so busy with SpaceX, Twitter, and Tesla, and so many other things that he really probably doesn't have that much time to make that much of a difference in the cryptocurrency space. And we can't just all sit around and wait for him to take us to the moon anyway. We all have to do our part, and we have to take cryptocurrency to the moon. Maybe with Elon Musk's help we can make it past the moon and make it all the way to Mars. But we have to do the effort to make it to the moon in the first place. I was wrong before, we weren't at the bottom, and I could be wrong again. But I really do think that there's not much that could cause more fear than everybody thinking that every cryptocurrency exchange is about to collapse in the next week, and that's what we just went through. So if that wasn't what capitulation looks like, then I'm kind of scared to see what is. But it doesn't matter, because like I said, I'm still in for cryptocurrency, and I'm going to keep dollar cost averaging until we get back into the next bull market. Let me know what you guys are doing. Have you given up on cryptocurrency, or are you just going to continue buying no matter how much blood is in the streets? Either way, thank you guys so much for watching. I hope you have a wonderful day, and don't forget to hit that like button. I'll see you next time. Bye.